What's going on, guys? What's going on? Welcome in, welcome in. Get started here in a second, but welcome in, guys. Welcome in. I know today was pretty much a very rough day. Richard, what's going on? I'll take a look at Oxy for you. Definitely a rough day here to start the week. Obviously today, this is a short week. Something that we pretty much been saying. Um, pretty much for most of the day and even on the end of last week. So something you want to be pretty much reminded about the fact of your swings. That's pretty much the biggest key part about that is holding swing positions overnight. So hopefully a lot of you pretty much at least manage your size in your positions there overnight. That's probably the biggest key. Of course, going into CPI data tomorrow, that's going to be where it's literally a flip of a coin right now because I'm pretty much my mindset is that I'm sure a lot of retail traders, being us, are pretty much holding short positions, expecting the market to continue rolling over. But here's the flip side is that we don't know if it's going to be somewhat of a sell the news type of event in which we basically already priced in inflation already being as high as we expect it to be tomorrow. So that's kind of where my thought process is right now is that the market may have already priced in that inflation data is going to be bad tomorrow, and we can end up trying to get a nice little rebound day tomorrow. That's why I was a little bit more conflicted about whether I really wanted to hold a position here overnight today or if I really just want to stay cash. Just for pretty much peace of mind, I did stay cash here tonight. I was about to swing some tech calls. I didn't want to do that. Obviously, I don't want to get caught, especially being the fact that it's a short week. If it probably wasn't a short week, I may have took the risk and got some lottos, and I would have risked it into tomorrow's CPI data. But it's not worth the risk. The risk reward is basically not there going into tomorrow, with it being a short week and then being out of the money with those lottos. It's just not worth the risk. So pretty much just knowing where the odds are against you. But hopefully that kind of gives you just an insight of what my thought process is right now going into the data tomorrow. So I'll wait to see how it plays out tomorrow. One thing that pretty much also crossed my mind was that we could end up seeing a potential gap down tomorrow off of that data, being that it's going to be the immediate reaction. And then we could be the flip side. Instead of pretty much gapping down and bleeding out today like we did, I think we could potentially gap down tomorrow and then we start to slowly climb. That's another thought that crossed my mind. So that's just where I'm at in terms of gauging all the circumstances that could happen tomorrow following that data. All right. But quick analysis in which I'm looking at for SPY. I do have a little bit of a zone here coming down towards 437. It's basically what I'm looking at tomorrow, in which that could be a little bit of a small gap down that we have going into the data. And then that's going to be the turning point in which either we turn around at that 437 mark, we basically retest our anchored view up that we broke down from, which pretty much dates back to our highs from the beginning of January. And that was that 442 that has pretty much been screaming about for the past week and a half to 2 weeks is what I was basically looking at. Is pretty much reaching that anchored VWAP at that 442 mark. I was expecting to hold that 442 half and then see if we end up breaking down on that on data tomorrow. But that's where the part is that it comes down into the sense that they may have already priced in CPI data tomorrow and they broke us down below that anchored VWAP. So 437, I'm gonna look to see if it holds. If we hold there, then we can slowly start to climb back towards 442, retest the anchor VWAP, and we'll see if it ends up acting as resistance or not. Otherwise, if we fail that 442, we have a little bit of a minor support here right around that 433 mark is where I'm going to be looking at in terms of this bleed out just continuing, which would be about another 6 point down from where our close is right now. All right. So that's just the mindset of where I'm looking at in terms of SPY analysis and which way we could hold. But 437 looks to be a pretty key mark for me going into tomorrow. All right. Let me look into some of the names that you guys mentioned. But what's going on, El Lobo? What's going on, Con? Let's take a look at Oxy here. I know that oil hasn't been doing too hot. Usually, when we see tech going down, we usually see some nice moves into the oil names, your pretty much your industrials, your materials, and so forth. But this has not acted so well in terms of that. Uh, Looking at pretty much first thing would be identifying a trendline support. So where would be your ideal risk to pretty much entering in terms of getting in a support? Well, basically, what I'm looking at is pretty much you're approaching your support level likely here tomorrow, in which you're likely reach some support right around this 5680. is be where you would end up touching your trendline support. That to me would be ultimately your risk in here is pretty much getting in at that 5680 spot, and then you look to see if you hold that trendline support or if you end up breaking down. That would be my ideal way in playing this and pretty much looking at that. The other thing I want to see is do we actually have a flat top to make this a potential little ascending triangle formation here. We could make a little small case. Probably looks more identified on the smaller time frames, but that would be more or less your little ascending triangle formation that you have with Oxy right now. So you want to pretty much get in at this 3680 level, the 5680 level. You look to see if it holds. Apply your stop loss, whether it be that 15-20%. And then if you can't hold that, then obviously you're pretty much coming down. And I actually have your support here. You're sitting at around 54 half is where you're looking at. So if that is the case, Richard, and you're pretty much looking to get uh, towards those puts, then you're looking for 5680 to crack on that trend line support. And then you're looking to pretty much look to secure some profits, at least, at the very least, some profits at 56 half would be the spot that I would ideally tell you to look for. All right. So 56, 54 half is where you want to take your profits. Your breakdown is under 56.80 on this. All right. So that's pretty much, hopefully that kind of gauges you there, Richard, in terms of what you're looking at. But it looks like a little bit of a solid ascending triangle. It's just that oil is taking a hit. So those puts will likely play in your favor as it's not showing any kind of relative strength right now in terms of the sector as a whole right now. All right. So I do like that one in particular. Anyone else have anything in particular that they were looking at? I think one ticker that I was actually watching was Baba. This may be one that I potentially look at going into tomorrow, and I think it was pretty much off the weekly here. The reason why is because I basically have a little bit of a descending channel formation that we have dating back towards November of last year. And as you see, it pretty much respects the support resistance here for the most part. And we pretty much hit the halfway of this channel in which you're going to find some support right around, more or less around this 96 mark. Here's where I'm looking at. So if we drop down to about 96, I'm going to look to see if we hold that 96, 96 half. And I'm likely going to see if I get some calls there on that, in which we could potentially form a little bit of a inverted head and shoulders if that ends up playing out. So if you see that pretty much drop a little bit of a left shoulder right there, I wanted to take out that arrow. So you have a left shoulder right there. Obviously you have your head at the bottom of the channel, and then you could potentially come down towards that 96 to 96 half, and you form a right shoulder right here, in which then that'll play out right towards your pretty much your resistance of this downtrend channel, and you'll hit that pretty much right around that 125 mark. So this is what I'm going to watch for tomorrow. We'll see if it continues to bleed here, maybe with the broader market, in which I'll be looking to see 96 half will likely be the spot where I start to scale in, and as it continues to bleed down to that 96 mark is where I'll likely have a full size position. And I'm going to probably get about 2 to 3 weeks. I know that I pretty much gave this one out in a trade idea before. I think at that point in time, we were breaking above the halfway point. We just were not able to hold above that halfway point, and we pretty much made a nice little U-turn. So pretty much second stab at this one yet again. We'll likely see if I probably go out to some spreads, dating out towards that 125 mark for about 3 to 4 weeks out, and I'll play that one and probably likely swing it. So that'll be one in which I pretty much pay attention to personally tomorrow. 14, let me take a look at CRM for you. Let's take a peep at this one. I haven't looked at CRM in quite a while, honestly. So one thing I don't like about this is that it kind of looks a little bit like a bear flag formation right here. That's something I don't particularly like, to be honest with you. So if you pretty much look at this, you have a little bit of a bear flag formation going on here, in which you see that you pretty much gap down off of that here today, and that was not a pretty. Obviously, it held. We'll likely see if it maybe gets a little bit of a consolidation here to the side. Probably hit a little bit of a resistance right around that 199 half mark. As we see, it pretty much held quite a bit today. Granted, the fact it broke down on this little bear flag. So 199 half will be where your resistance point is, where you're looking at for CRM, and then you're pretty much looking at taking out that low from February 22nd at that low of 184.44, which is about a $10 move to the downside here potentially. All right. So this is pretty much not one ideally that I would want to be in just yet. If and that's pretty much off of the weekly. So if I pretty much look off, if I go back to the weekly, I just want to see pretty much where your major support level is that you're potentially looking at off of this one. Let's see if we can find a major support level where we can consider our demand zone, which buyers will pretty much step in. So if I'm looking, this is ideally one of those demand zones in which I would look to see if buyers step in right here. This is that demand zone between that 173 to 175. That's about a $2 range. That's where I would potentially look to see if buyers step in and that causes a reversal. Otherwise, if you can't hold that, then you're coming down to about 163, in which that was basically your breakout point and also your prior resistance back from November 19th. So if you can't hold this little 173 to 175, I do have this coming down right about towards about 160. It was about 163 is where I have it, as that lines up right around your consolidation, your resistance port, where you had that little bit of consolidation from 2019. All right. So hopefully that kind of helped you there. 14. But again, a little bit of a little bear flag formation there is looking like off the weekly. So 199 half will be the spot if you are holding calls. Hopefully you potentially get that bounce up to that 199 half, and that'll probably help you get that quick little percentage that you're looking for. Maybe an average of about 20, 25% at least at the bare minimum. All right. Richard, you said you bought 117.5 Vero call. I haven't looked at it very much today. I'm gonna be very honest. Because I know that if I ended up looking at this stock, I was gonna pretty much FOMO into it, and I didn't want to do that. But one thing that kind of stood out to me when I pretty much took a peep at the end of the day is that it did. The wedge was pretty much looking very clear to me, and you could make a case that it's basically looking like a little bit of a bull pennant right now. So I did see, and I know that Avery mentioned it as well. He saw some calls going out towards about 17 half to $15 calls as well. So we could potentially see that. Granted, the fact that you're likely gonna get, if it breaks out of this little bull pennant right here, you'll likely see the other side of this flagpole that you have. So granted the fact this is about from $10 down towards about $6. So about a $4 move. So you're likely looking at that $4 move to the upside, in which that bull pennant will basically play out towards that $17 mark to the upside if this does end up getting that breakout to the upside. All right. So it's about a $4 move from the downside here, more or less from the down from the flagpole, and then you're basically looking at that move to the upside, and which is basically going to look towards that 17 mark. And I do see an alert from Siggy Wiggy in which, yes, they actually did hit calls, and it looks like a lot of them are actually in the money. So you did see that 1750 call. That's actually quite interesting. I saw that Avery was basically just talking about it. I'm sure he wanted to FOMO into it also. But yeah, those 1750 calls, I would not be surprised. It did remind me of the SST play that I ended up having. Those of you that maybe remember that. And I actually wish that I woke up a little bit earlier this morning, and I had some time to pretty much go through my scanner. I probably would have caught that. But this is the other one in which I ended up catching was that SST squeeze. And this was pretty much another one that it kind of played out in the same way in that sense. Um, in which, if I pretty much go down towards when it actually first broke out, you actually had a little bit of a similar wedge type formation here. It's a little bit of a similar type wedge, not exactly to that point, but as you see, you got that beautiful breakout and you had that massive gap up after that. So you may not get that kind of move tomorrow per se off of Vero. You'll likely get the breakout. It'll probably tether, in which you'll see a lot of more call flow will continue to come in tomorrow. And then what will be the case is that Wednesday you'll likely see that gap up. In which case, honestly, I actually see the broader market actually giving us that relief bounce that we're expecting on Wednesday. So that may play into effect with that as well. But I would not be surprised if you see about maybe a quarter of what this price action is that we had back from April 5th on SST. So that's something to keep on watch. But I think the biggest thing that obviously I do have to say to everyone is you only risk what you're able to lose, especially on a short week right here. Playing these little short squeezes, it's gonna the theta's basically just gonna eat your premium alive right now. So be aware of that. Don't try to go too much out of the money, especially if you are gonna try and go in and get entries tomorrow. For those of you that are not aware of it today, just be mindful. Try to play with small amount of money on this. If you're basically gonna get a call or two, then you could feel a lot more comfortable about holding it longer. Because if you're gonna end up getting pretty much, getting your premium in, which is too much for you to sleep at night, yeah, that's a very big problem right there. All right. So other than that though, 14. You wanted me to look at two other ones real quick. All right, I'll probably look at those two last ones, and I know that we're about to start class here shortly. So I'll take a look at those real quick. APO, finance. Actually, this actually reminded me of the fact that I was actually supposed to be looking at Blackstone. I wanted to look at Blackstone today, and I actually did not look at that. All right, so let's take a peep. Um, we have a little bit of a downtrend resistance, probably the first thing that we basically want to identify. And one thing that pretty much highlights to this one is that I usually wait for this to pretty much, especially when you have such a defined downtrend resistance as this one does, basically. And obviously that's been the case with a lot of growth names for that case, is that I usually wait for it to break that downtrend resistance. So this is one that I would not necessarily dip my toes into just yet. If you really wanted to pretty much get frisky and you basically wanted to try and catch a knife basically, the fact that it's pretty much still a defined downtrend, then you're basically looking to try and buy at support. If you're trying to buy at support, then you're trying to buy at that 56 half, right on this downtrend support line. At that 56 half would be your ideal entry spot, and then you would pretty much risk the downside here at this wick fill to the bottom, in which says 56.30. You're risking that to take out a new low. Otherwise, if you're trying to play it for the upside and you're trying to play it ideally where you're going to look for that breakout point, then you're looking for that break over that 57.20, and then you could potentially look to play this out. Let's see where we have a potential supply zone right now. And if I'm looking at that, you're ideally looking into this range right here, in which you could play this up towards about 58 half to see that upside there. All right. So that's basically what I'll look at in terms of this one. The only factor is that, again, it's still in a defined downtrend. When you're usually trying to buy in a defined downtrend, you basically want to try and buy at support because that gives you the ultimate opportunity to get the bounce rather than the case that if you don't get that downtrend break. All right. So hopefully that one kind of gave you that gauge, and then I'll look at the last one you just mentioned was EPD, and we'll call it a wrap here so we can start class because I know that Sig and Dap are probably just waiting just a bit. First thing I identified this one is that we did have a nice little wedge action going on this one. As you see, we pretty much broke out of that little wedge. So that was a nice little breakout that we obviously identified. We had the breakout. You basically had the retest. The only thing about this one was that it's pretty much coming right back down. It's likely we're going to end up retesting that downtrend break once more down towards that 120, that 2613 mark is basically where you're ideally going to look to see if you can start to scale into a position. So 2613, you test basically getting right at that downtrend resistance support level that you have. And then what you're basically risking right now is this gap fill as your stop loss. In which case, if you end up losing that support trend line right now at that 2613, you're risking the gap fill here down at the bottom, basically at that 26 flat, because basically you're looking at 2606, gap completes at 2605 is what you would be risking. All right. So I would say you stay sidelined until 2613, gives you about $6, 6 cents to the downside here. Obviously, you're gonna look to see if you get a nice bounce. That will probably be the most biggest thing that you want to see. The fact that the oil and gas sector is not performing so well, I'm leaning to the fact that you're going to likely end up breaking this trend line support here, and you're likely risking this gap fill. So if it was me personally, I would likely end up waiting to see how it pretty much plays out of this trend line support, and the gap fill would likely be the spot in which I'll look to see it get completed and then look to get into a position. All right. So that's pretty much what I would say about that. I know that you guys mentioned HYG and Lyft. I'm gonna take a quick peep because I know class is starting and I'm kind of pushing time. This is definitely an ugly chart, and this is the bond ETF. Ouch. Yeah, this is likely gonna continue to make more lows here. Let's go out towards. See if I go out towards the weekly. Probably have to go to the weekly on this. Yeah, this is not gonna play out very pretty. If I'm looking for what would be your quote unquote demand zone here, your support, you're likely looking at right around this range is where you're potentially looking at to find a potential short-term bottom on the bond yield. So you're basically looking at 78, 78 half down towards 78 flat is what you're looking at to see if this HYG finds a flat. That's basically what I would say. And I just realized you did say you're in a short, so that actually plays out perfectly, Matthew. So that'll pretty much take you right into the money, and that'll play out for you. All right. And then last one real quick was Lyft. This is one endless falling wedge that I'm looking at. My goodness. All right. So let's see a little bit of a defined downtrend resistance here. Let's see our falling support trend line here that's going on. and this is pretty much, as you see, your wedge is basically trying to close in as we speak. I just don't. You're basically at that level in which I would say you're pretty much buying where I would ideally like to buy, and I think Sig would like usually co-sign in the sense that he usually likes to buy his falling wedges at support. This is one of those cases in which you're basically coming right into that support level, in which you're basically looking to buy this right around the 31.32 mark, 31.30 is where you're ideally looking to buy into this falling wedge. And that way you give yourself the bigger opportunity of the move towards the resistance and then the breakout. All right, and I'm pretty sure Sig probably usually will say the same thing. So, not the fact that it's a very well defined downtrend, but obviously you're looking to give yourself the opportunity of buying at the support, and then that way you can capture the move to the resistance, even in the sense that if you don't break out of that resistance point. All right, and then just the other quick highlight, real quick, is just the gap fill. Obviously, I did want to see where that gap ends for you, and that basically will likely give you that little wick to the downside to support right around that low 31 mark that I did mention. All right. So this is a beautiful one in terms of the opportunity of buying at support in the falling wedge. So I do like this one in particular. But give it about another $2 move to the downside, and that'll be your perfect entry on that falling wedge. All right. Other than that, though, that'll wrap it up, guys. Appreciate you guys joining. Let's tune into class. Let's see what Sig and Dapper have for us. But other than that, I'll see you guys on live tomorrow morning. Later, guys.